market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, investors really positioning for a second Donald Trump presidency. Central bankers weighing whether his policies, could lead to slower global economic growth and higher inflation. Now, for more on this, let's bring in Bloomberg's EMEA News Director, Ross Matheson. Christian Keller, Head of Economic Research at Barclays, is also joining us. We have a lot going on. There's a crisis in Germany, and we also see Viktor Orban greeting a lot of the EU leaders over there in Budapest. Ross, let's maybe focus on the politics. I know there's a lot of analysis to trying to figure out how Donald Trump won so big. But also, are people worried about law and order in the country? Are they worried about who he goes after? Or is the focus now really on what he does to the rest of the world?
Well, it really seems to be what he's going to do in a way between now and January even. I mean, this is obviously a comprehensive victory for Donald Trump. So those issues around a long drawn-out result possibly being contested, that seems to have faded away. I mean, you can see the comments from Kamala Harris last night, we respect the result, let's now get on. That seems to be the mood inside the US. But we can see Donald Trump already possibly starting to dip his way into various things, including global affairs. We know he's had a bunch of phone calls with leaders around the world, most notably, very quickly, had a conversation with the Israeli Prime Minister Benjamin Netanyahu. Interesting to see what they would have talked about, and perhaps, Benjamin Netanyahu asking guidance or seeking, Trump's thoughts about the state of the conflict in the Middle East, including the war that Israel is still fighting in Gaza and Lebanon, and what Trump's view might be on that. So do we see Donald Trump start to, in a way, sort of shadow run US foreign policy between now and January? He had a conversation with the Ukrainian President Volodymyr Zelensky. So certainly getting his way already into those conversations, and you can see leaders gravitating towards him, which is just a reminder that Joe Biden is essentially truly a lame duck president at this point.
Rosa, in terms, again, of these hotspots, so if you're Mexico right now, you're probably worried about, what some of the Trump policies mean for you. We need to look at Russia, Ukraine, you look at the Middle East, you look at China. I mean, he also had Germany in his sights in the previous administration. Does that depend on President Trump, or does it depend on the team that he builds around himself?
Well, a bit of both, because there is a view, at least, that this time around Donald Trump may have a more experienced bench. He had people in his first administration who seemed to be quite randomly put into positions with no experience in those fields. He might be a bit more careful this time around. Does he then listen to those people is another question. There's a school of thought that Donald Trump, famously hears the last thing that someone says on their way out the door, and that's what he actions. So it's very unclear how much he'll lean on that advice, but certainly he'll feel like, having done it once before, he knows a lot more about the job the second time around.
Christian, it's very difficult, right, for you. I mean, you're head of economic research, but this goes into, politics and how the team is built and whether they're loyalists instead of policies.
Yeah, I think it is it's very difficult. For markets, I think there was a sigh of relief. It was much more decisive than people expected. So markets, showed this with a, reduced volatility and a rally in equities. But now the question is what happens over the medium and long term. And I think the general approach has been, take Trump seriously, but not literally. And so markets are probably discounting a lot of the radical policy proposals on, how high and how quickly tariffs will come, how many people would he really deport, in terms of immigration policies. But the question is now, what will come through in terms of policies? And some of this will be seen over the next, half a year or so. We think it will take some time, even with tariff policies, to be implemented.
Our John Authors wrote a brilliant piece saying, look, where the Trump trades still are not priced in. And, of course, he's talking exactly what you're looking at, overseas surprises taking shape, tariff frictions, cabinet picks. Is there, again, as you see the world, has it changed dramatically in terms of growth, in terms of possible inflation, if some of the tariffs do go through?
Well, I think, first of all, markets right now look at this and say the world looks actually quite good. We are growing 3% in the U.S., growth slightly surprised in Europe for the third quarter, and even in China. Now, going forward, if you were to think that he implements 60% tariffs on China, 10% on the rest of the world, the effects will be quite dramatic, in particular then if you see retaliation. Now, as I said, most people believe he won't do that. He's still a transactional character. He will use that as a negotiation tool. He will be tough on China, also in Europe, but probably he tries to get something out from the Europeans. And, that may work out. And I think this is what markets are pricing at the moment. And that's why markets are not, not really pricing the radical scenarios of him doing what he actually said.
Do we know who will be in his cabinet? We don't know, but are there speculations of people that are actually quite well known? Or will Donald Trump pick, loyalists that most people in the market may not have heard about?
Well, he does very much prize loyalty. We know that. There's obviously a lot of jostling already going on. You can see some people starting to advertise their services. Big question around Elon Musk. Does he have some kind of role in this administration, official or unofficial? And how does that, again, play into policies, not just in the US, but overseas? You were just talking about China. Donald Trump has made clear he's going to be tough on China, but equally, Elon Musk has very big businesses in China. And does that change the dynamic a little bit in terms of how Elon Musk sees China? And does he get in Donald Trump's ear about that? So that's one, possibly an official role or an unofficial role. Either way, going to be very influential on Donald Trump when it comes to policy, both in the US and outside. But it's very early days. We're just starting to see people put their names forward for various roles.
Christian, does it change the trajectory of the Fed? So we're expecting 25 basis points. It could be an inflation if there's a lot more fiscal spending, if the tariffs, put on, even if it's not 60%, even if it's 10 or 20%. Does that complicate the job of Chair Jay Powell?
It certainly does. It certainly does. And they will be very careful today not to, talk too much about politics. But the fact is that you mentioned fiscal. So far, we only talked about the tariffs and potentially the tightening of the labor market if you really deport many people who are now in jobs and illegally in jobs in the U.S. But the fiscal is a big question. I mean, we do know that Trump will very likely extend the existing tax cuts, which would otherwise expire by the end of the year. But then if there is a red sweep, which we don't know yet whether that will happen, but if there's a red sweep, we could be talking even about corporate tax cuts and a wider deficit than markets are currently pricing. We think rates markets probably have, now adjusted for the scenario where he just extends his tax cuts, but not yet for something potentially more.
Christian, we're looking at live pictures actually coming from Budapest, where Viktor Orban, together with the EU leaders of the 27 member states, are basically, Viktor Orban is greeting them. And I imagine a lot of the discussion today will be, of course, about Donald Trump. Does it put Europe in a very difficult situation? We'll talk about Germany and its own crisis in a moment. But is there anything that European leaders can do to, if not Trump-proof their economy, try to make sure that they're not as dependent on the U.S.?
Yeah, no doubt. I mean, this is a very consequential election for Europe, maybe not as much as for China, but Europe clearly has been in his focus with regard to the trade deficit and with regard to defense spending. Some of the European leaders have also been quite outspoken, against Trump, and they're now pedaling back. And I think this will be very crucial for Europe. It could. Some people opine that it could be actually a unifying moment. So it could be good for Europe because he forces Europe to do what they need to do anyways. But it will be very crucial what happens in the next few months and quarters and how strong he will be on tariffs on Europe or whether he negotiates with them.
All right, thank you both for joining us. So Bloomberg's MEA News Director Ross Matheson, Christian Keller from Barclays stays with us because we also need to talk quite extensively about Germany. Coming up, a coalition collapses, a call for a snap election, and a new finance minister. We're live in Berlin with the latest on fast-moving developments in Europe's biggest economy. That's next, and this is Bloomberg. Welcome back, everyone. Now, Bloomberg has learned that Olaf Scholz's economic advisor, Jörg Kukies, is to become Germany's new finance minister. Now, this comes after the chancellor fired Christian Lindner following a dispute over borrowing rules. Now, the move has also led to the collapse of Scholz's fragile three-party coalition, with the opposition now calling for a confidence vote by next week. Now, for more, let's bring Bloomberg's Alan Crawford in Berlin. Alan, I mean, this frankly is messy, especially at a time where there are a lot of question marks of what Donald Trump would do for Germany. So how did we get here and what happens next?
Well, if you recall, this government, it came into office just at the end of 2021, and it was the first ever coalition, three-way coalition of the Social Democrats, of Olaf Scholz, the Chancellor, the Greens and the Free Democrats, a kind of pro-business party of Christian Lindner, this finance minister who just lost his job. And initially, they were confronted with all sorts of crises. They were just coming out of the pandemic. Then Russia launched its war, its full-scale war on Ukraine. And there were the attendant, crises in terms of the energy prices skyrocketing. And the coalition was broadly popular back then. But then they just set about infighting. They couldn't agree on all sorts of issues. And it's become increasingly fragile. And then yesterday, Scholz gave quite a remarkable statement yesterday evening where he blamed the finance minister, Lindner, of egotism, of withholding spending just for ideological reasons, and effectively holding the country to ransom at this crucial moment. So the government still survives, but it's now a minority and limping on.
Very, very quickly, Alan, I mean, I guess, on top of that, the most important thing is the 2025 federal budget, which needs to be approved by the end of the year. So what happens with that?
Well, frankly, no one knows. At the moment, we just had the main opposition leader, Friedrich Merz. He called for a vote of confidence next week. It's hard to see how that can actually be brought about. Scholz wants it to come in January, followed by elections in March. But frankly, we're in not quite uncharted territory here, but it's very unclear what will happen other than further instability.
Alan, thank you so much. Alan Crawford there from our Berlin bureau. Now let's get back to Christian Keller, head of economics research at Barclays. Christian, I was so happy you were coming on today because you understand German politics and economics almost like no one here in London finance. Look, I mean, this looks messy. So I don't know whether we're going to see a change in Chancellor in the next 3 to 4 months.
Very interesting to hear that term instability in context with Germany. That's something you never heard, right? And certainly it happened much more quickly than one thought. I mean, your Kukies is certainly a very competent person to fill that role now, but obviously this is about a political change now in Germany. And without actually going into politics, I think the sooner is probably the better. I mean, it's difficult to see how the situation would improve in the current situation. Donald Trump, gaining the presidency in the US, I think the current government is also not on the best terms with him. So overall, it does seem to move away to a new coalition would probably be helpful. And there needs to be a lot of policy change. And this is not just about spending here and there and maybe loosening the debt brake. This is about fundamental structural reforms probably that Germany needs at this moment.
Christian, let's just go to Budapest, where the European Council President Charles Michel is speaking to reporters for the first time we hear from him since Trump got elected.
What is your message to Volodymyr Zelensky? What is your message to Zelensky?
We are on your side, dear people of Ukraine, because we understand very well, we didn't change our mind, that you fight for our common values, for our common principles. And that's why each European Council meeting was the occasion to strengthen our support for Ukraine. It is important not to give up, because strengthening Ukraine means strengthening ourselves. And we want a just peace, and this just peace has to be based on the principles of the UN Charter.
Is Donald Trump on his side? Is Donald Trump on his side?
Please.
Climate change. Are you planning to go to COP29 to Baku? And what is your plan to discuss with Ali about democracy? Because we have lots of problems.
There are two topics. First, it's important that we have this meeting on climate change, because we can see every week and on each continent the terrible consequences of this climate change challenge for all of us. It is the case in Spain, but not only in Spain. On each country you can see the terrible effects. That's why we need to act, and to act together, we need to meet. We need to meet to make decisions together. And it will take place in Azerbaijan, and the EU will be there. And you know that the EU is playing a very strong role to make sure that we have more ambitions, and that we deliver on our promises. And I will have also the occasion to meet with President Aliyev, and we'll discuss the bilateral relationship between Azerbaijan and the EU in all fields, including the fields you mentioned.
Do you think that the Orban presidency brought closer peace with Ukraine?
Can you repeat, please?
Do you think that Mr. Orban, that the presidency of Orban of the EU is getting closer to getting peace with Ukraine and Russia?
One thing is certain, the EU is strong when we are united, and we have taken the world by surprise. Maybe we have taken ourselves by surprise in showing how we are united in that, on that question, on that topic. And you know that there are two tracks. On the one hand, we support Ukraine with more military equipment, with more financial means, with more political support. The EU candidate country, the status recognized to Ukraine on the one hand. On the other hand, there's another political battle on the international stage within the international community, and is the fight in favor of the UN Charter, in favor of the territorial integrity and sovereignty. And many countries across the world, they understand very well, if at the end it's not Ukraine which prevails, it means that we are all more vulnerable, because it means that the UN Charter is not so strong. And I think that this is the main political battle in the years to come. We have to protect, to defend the UN Charter, to make sure that we do not accept any double standards-based approach.
Is Europe prepared to retaliate on tariffs if Trump imposes tariffs on Europe?
Look, this is absolutely clear that we would like to deepen the transatlantic alliance and the bonds with the United States. This is our wish, there is no doubt. But we have a plan for the EU, for a stable, a more prosperous EU, and the plan is called a strategic agenda, and everything is in the plan. And now we have to implement what we have agreed on. In June, the 27 leaders at the highest European Union's level, they decided to make prosperity, security and defense and engagement with the rest of the world as the main priorities for our common future. We know what we have to do, let's do it.
And if he imposes,
please.
Future plans. So why exactly should the EU be better prepared for Trump 2.0 than like 5 years ago?
My conviction is very, very simple. In fact, we have to be more master of our destiny, not because of Donald Trump, of Kamala Harris, but because of our children. This is our responsibility to make decisions so that we are not dependent of something which is decided elsewhere. We have to do more to deepen our single market. We have to do more in terms of competitiveness. We have to do more in terms of European defense capabilities and with partners, because we want to engage with partners. We believe in a multilateral world with a strong multilateralist base. This is what we believe in.
Mr. Michel.
Very important member state Germany is collapsing right now. What does it mean for all the plans?
Look, we have democratic...
What is Charles Michel also actually answering a lot of questions from our Ollie Crook, who's on the ground, talking about unity, talking about this is Europe's moment, actually reiterating its support, Europe's support for Ukraine. But we know that even in Europe, that's very split. Let's get back to Christian Keller, head of economics research at Barclays. Christian, we're talking about Germany, and it feels like the future of Europe is really tied to what happens in Germany. They're not, some saying that if Olaf Scholz were to go be succeeded by Friedrich Merz, then maybe, this would be seen as a bolder, more force of nature, a voice in Europe that could counter Donald Trump. I mean, does it also change the trajectory of German economics?
It probably would. I mean, not in the short term, in the terms of demand, it's very much dependent on cyclical forces. And I think the key question is here whether Germany manages to get out of a very challenging structural situation. This is about energy. This is about labor supply. This is about the very different role that China now plays vis-a-vis Germany than it did in the past. And Germany needs to find the answers there. It probably has to do with some structural changes. This is what the current coalition was not able to agree on. And the next coalition, which would likely be a two-party coalition, is very likely to be in a better position in a way to come out with this. Also, I believe possibly the relationship between Merz and Macron may be better than that between Macron and Scholz, even though Macron himself is in not a very strong position at the moment. But, these things do matter in Europe.
What do you think Germany needs right now?
I think Germany needs, if you ask people in the industry, more clarity on the energy policy. What is the concept in a way going forward? Yes, green transition, but, how do we secure base energy in relatively or less expensive energy where it is now? I think there's a big question about labor market. It's not only the demographics that, there's less people at working age, but also people choose not to work as much as they could. That has a lot to do probably with welfare benefits. As I said, not to get too much into party politics here, but if you talk to businesses, it has a lot to do with supply-side economics, which this coalition, I think, has very, very different views on. And the next one could be moving ahead in that respect. And I think that could do a lot about confidence as well. Confidence effects are very important.
Christian, I need to also talk to you about the UK and the Bank of England, because it's also a big day, 25 basis point cut, probably from the BOE. But if you put it in the context of the budget last week, that wasn't well received by the markets. I mean, does the UK have an okay blueprint to grow? You can fix everything with growth, but you need to get growth.
Yes, I think the budget last week was a surprise. It was about 1 percentage point larger deficit than people expected, and roughly 2/3 of that is current spending and 1/3 is investment spending on the public side. So the latter part, that should be good in terms of longer term growth. The short term, the current spending is unlikely to be lasting. It probably adds, if you think about it, maybe the OBR says 0.6% to growth at the peak next fiscal year. We think it's going to be a bit less. The way they finance that through an increase on the national insurance contribution, all the textbook economics tell you that that's a bad idea, in terms of we think it has a negative multiplier on crowding out the private sector. So, markets, I think, didn't see it necessarily as a long-term growth budget. And the Bank of England now has to think about what would be the impact on inflation as well. We think they will not go overboard. They probably still have in their longer-term forecast inflation falling below 2%, meaning they'll be okay. But it will be very interesting what take they have on the budget.
Thank you so much, Christian Keller, there, head of economics research at Barclays. What a day to have you. There's a lot going on, Christian. Coming up, as the world reacts to Donald Trump's election victory, we'll explore what his victory means for global affairs. We'll be joined by Bronwyn Maddox, Director and Chief Executive of Chatham House. That's next, and this is Bloomberg. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua in London. These are your top stories. Investors position for a second Trump presidency, with the S&P 500 notching its best post-election day in history, while his defeated Democratic rival Kamala Harris urges a peaceful transfer of power. Traders now turn their attention to the Fed and the BOE, with both central banks expected to cut rates by 25 basis points. Plus, a shock crisis at the top of German politics. The ruling coalition collapses after Chancellor Olaf Scholz calls for a snap election and fires his finance minister. Bloomberg understands his economic advisor, your Kukies, will replace him. So Donald Trump's relationship with world leaders is set to shape global events. The incoming U.S. president is expected to strain the unity of NATO allies and put the future of aid for Ukraine in doubt. In China, Beijing is braced for a trade fight, while in the Middle East, Trump is likely to reinforce U.S. support for Israel. So let's bring you a view from our reporters in Hong Kong and Tel Aviv now. Let's start with Bloomberg's Jill Dices. Jill, what does another Trump presidency mean for U.S.-China relations and an expanded possible trade war?
Yes, Francine, I think at this point what we're really looking out for to see is, whether Trump actually makes good on some of these tariff threats that he's issued during his campaign against China. The biggest one being that eye-popping 60% tariff on Chinese imports to the U.S. that he's floated there. Now, ultimately, I mean, look, Xi Jinping in Beijing has had a lot of experience, obviously, with the first Trump administration. That's when the U.S.-China trade war began. We've seen under the Biden administration that we've actually had, further intensified, tensions between the U.S. and China. Biden has expanded, curbs on advanced technology and stuff. Now, that's something that, obviously Trump could continue to sort of act tough on China if he wants to do that. But the complicating factor this time around is that Trump, during his campaign, has had a really big backer in Elon Musk, who has significant business ties in China. And so there might be a little bit of a play there in terms of how that relationship ultimately plays out. But we'll have to see as, Trump obviously gets inaugurated, staffs his cabinet, and what that ultimately looks like for U.S.-China policy.
Jill, thank you. Let's also bring in our Israel bureau chief, Ethan Broner. So, Ethan, what will Trump mean for the conflicts in Gaza and Lebanon, as well as with Iran?
I think generally speaking, Trump is going to unleash Netanyahu more than the Biden administration did. I think that the things that have concerned the Biden administration and the region in terms of Israel's military endeavors have to do with humanitarian concerns. And those are issues that Trump has never really raised when he was in office and afterwards. So the sense I have is that is that there'll be an increased sense of militarism on the part of Israel, particularly toward Iran. Now, that said, I don't think that Trump wants to see wars. I don't think he wants to see oil prices skyrocketing. So my sense is that Netanyahu may move relatively soon on these issues and then work with Trump after January of 25 to sort of create more broader diplomatic arrangements.
Ethan, thank you. Ethan Broner there in Tel Aviv, Jill Deesis in Hong Kong, and we'll have plenty more, of course, throughout the day. Joining us now to discuss all of this changing foreign affairs is Bronwyn Maddox, Director and Chief Executive of Chatham House. Bronwyn, good to speak to you. I know you had a big event at Chatham House yesterday discussing the U.S. election. If you focus on foreign policy, what will be Donald Trump's immediate change when it comes to the Middle East or Ukraine?
I think Ukraine is an immediate question. We're going into a very difficult winter there. But I think, for all the things that Donald Trump has said about pushing for a deal, there wasn't going to be a big flow of arms coming from the U.S. again for Ukraine. We could see the reluctance in Congress, even if there were particular reasons that held it up last time, just a big reluctance to keep pouring money and arms into that. And that is something that Ukraine has gradually been bracing itself for. So the question is Donald Trump actually going to push for a deal, a photo opportunity, sitting down with President Putin and trying to come to some kind of agreement? And if he did that, would it be worth anything? For my money, I think it's very hard to see Russia stopping, for example, at the lines that are currently being fought over, if there wasn't a really credible American guarantee for Ukraine's security. I don't think Europe has the firepower to guarantee Ukraine's and its own security against Russia just on its own. So it really comes down to if Trump wants that deal, wants to say that he's delivered peace, can he deliver American protection for Ukraine? Can he persuade the Ukrainians that they've got enough to begin rebuilding part of their country, even if they can't get back the other territory? And then you've got a big question dangling of whether Europe and Trump should put any weight on what President Putin says in such a deal. Yeah. I think it would have more credibility if China came into that deal as well. But there you're talking about something that takes really quite a lot of time and brokering.
But, Bronwyn, when you look at actually, some of the things that we're really focusing on is whether some of the European leaders can strike a deal with Donald Trump. So do you take him at face value, or is there, we know that Mark Rutte knows President Trump from his past. We know that President Zelensky reached out as one of the first leaders yesterday. Does that personal connection actually make a difference?
Yes, it always does. It always does. And Mark Rutte was chosen by countries partly reckoning that Donald Trump might get in and that it really mattered to have a head of NATO who could get on with the American president. I don't think Trump will pull out of NATO, but what he will do very clearly is say to European countries, look, you've got to pay more for your own defense. The American taxpayer has been footing the bill for a long time, and he has a point.
What do you think will come to that? Will European leaders again become stronger? Will they hold together, or will Europe splinter?
Europe is strained at the moment, and the fall of the German government, reflects part of that. You've got kind of dysfunction in the grand old French-German engine that made Europe work all these years. And they disagree, for example, enormously on China, where Germany has been saying we don't want tariffs on cheap Chinese things like solar panels and electric vehicles, partly because of the German car manufacturing supply chains that are there. But France wants sky-high tariffs. And you've got a real division there over one of the current wedge issues of European politics. And then each country individually is struggling at what to do about migration. So it's not a very easy time in Europe. But all the same, I think the prospect of Donald Trump in the White House does concentrate minds of how Europe can act together for its greater security and greater communication with the US.
Bronwyn, what kind of leader does Germany need? So we had this crisis with the finance minister being sacked. We could see a very early election, certainly a vote of confidence. If there is a change at the top with the new Chancellor Friedrich Merz, is he the right person to lead Germany, especially in this kind of, face-to-face with Donald Trump?
He could be. It really, this is a key relationship. For all that the UK goes on about the special relationship, the German-US relationship is one of the most important ones in a kind of Western alliance. It's not underpinned by enormous emphasis on defence, though that has been growing over Ukraine. But a lot of talk there about trade and just about positioning the EU in relation to the US. So, all I would say is that relationship really does matter, even though it is one often of the more low-profile ones.
Bronwyn, what will you be watching out for in the next couple of weeks? I guess it's how Donald Trump also builds his cabinet and who he surrounds himself with.
So that matters a lot. If you have a president, and let's assume his character, what we know of it remains unchanged from the first. Very, sometimes impulsive, but it matters enormously then who he surrounds himself with and what their agendas are, because it is an administration that will be shaped by that block of people, not just by Donald Trump. I'll be looking out for what he says about tariffs. We've had these very big numbers, like 60% tariffs on Chinese imports. I don't think he can actually do that without that, bring Chinese imports into the US almost to zero, and I don't think that's really practical. But what really is going to come out of that, what's going to come out of that for the rest of the world, that's a huge impact on markets and the dollar. And I will be looking at for what happens in the Middle East, particularly what Benjamin Netanyahu, the Israeli Prime Minister, chooses to do, and whether the Biden administration, which is still there for 2.5 months, what it tries to do to promote its preferred version of the future, which includes a deal with Saudi Arabia.
What should President Xi do right now?
That is such an interesting question. I think China is going to be pretty cautious about this. It will want to see what is going to emerge. What is going to emerge on tariffs, on climate, and particularly it will be mulling over this statement of Trump, where Trump is absolutely consistent in saying, I don't want wars. And he prides himself on there being, in his book, no new wars in his first term. So China will be bound to be thinking, what does that mean for our aspirations of taking control of Taiwan? Could we count on a US president not wanting a war if we did that? But I think generally China is on a campaign to see whether it can recruit more countries in the world to its view of things, its way of ordering the world. Not necessarily antagonistic to the US, but definitely its side of the vision of how countries should get on with each other, and not in the old American, if I say the word liberal, I mean in the old post-war kind of emphasis on individual rights, so on. So it will be just looking to see what it can make for itself out of the new alliances in the world.
Bronwyn Maddox, thank you so much for joining us, Director and Chief Executive there of Chatham House. Coming up, the Bank of England is set to cut rates later today with last week's UK budget and Donald Trump's return to the White House clouding the outlook. We'll get a preview next, and this is Bloomberg. Now, the Bank of England expected widely to cut interest rates by a quarter point today, but last week's UK budget and Donald Trump's election victory have cast new uncertainty over future policy easing. Well, joining us now from outside the Bank of England is our UK correspondent, Lizzie Burden. So, Lizzie, set us up for today's decision.
Well, Francine, given that inflation is back below the Bank of England's 2% target, every economist we surveyed expects this quarter-point cut today. So the focus very much on the rate path ahead. But as you say, Rachel Reeves, the Chancellor, threw a spanner in the works last week with that budget, the biggest fiscal loosening in decades. And off the back, you saw traders paring their bets on BOE cuts. But then we had Donald Trump's election victory and the expectation that his tariffs are going to weigh on European growth, and actually that having the opposite effect on the Bank of England, faster rate cuts. You have had some nuance thrown into the mix. JP Morgan Asset Management's Karen Ward saying if there's a fiscal response to tariffs, that could be inflationary. So it's going to be really interesting to see how the Bank of England weighs all of these factors. We'll get upgraded forecasts today. It's too late to factor in the election, but they will talk about the budget, although it'll be based on a pre-budget yield curve. And as we know, that's changed so much post-budget. Rachel Reeves doesn't have any headroom left, so it looks inevitably like there'll be more tax rises in the pipeline. But let's see how Andrew Bailey comments on all of this later. He's clashed with his chief economist, Hugh Pill, who's been more cautious than Bailey. Bailey saying that there's a more aggressive path ahead. And at the moment, markets are seeing a quarter chance of a December cut and 3 cuts fully priced for 2025. Francine, let's see whether that changes after today.
Well, Lizzie, thank you so much. Our Bloomberg UK correspondent, Lizzie Burden, of course, will bring you that Bank of England rate decision later today. We have viewers in the UK will see special coverage of the press conference. That starts at 12:30 p.m. London time. Follow that on TV and live on the Bloomberg terminal. Then later, we'll bring you a short interview with Governor Andrew Bailey following that press conference. Now, for more on the UK economy in the wake of Donald Trump's return to the White House, let's bring in Bloomberg's Rachel Evans. Rachel, thank you so much for joining us. I mean, when you look at the budget, there was also a thinking from economists and the markets that actually it means slower easing ahead. Does Donald Trump's election mean that we'll see even more slower easing?
I think Lizzie kind of framed it very nicely. You know, you have these two kind of competing impulses, right? You have kind of the budget suggesting that we may kind of sort of see a more inflationary environment and that the Bank of England will have to go slower. But then if we do see those tariffs come in across Europe and including the UK in that, does that mean that central banks over here actually have to cut more aggressively in order to offset some of the kind of deterioration you would likely see in the economy as a result of those tariffs? So it's going to be very interesting to see how the Bank of England looks to thread the needle. You know, we're seeing kind of gilts, obviously very, very sensitive to the outlook for Bank of England's rate path. We saw them really, really sell off last week on the expectations that the budget would mean that there would be slower cuts. So it's going to be interesting to see kind of how Bailey tackles that, because he has the potential to either calm markets and reassure them that sort of steady as she goes, or to potentially kind of signal sort of a change in where they're headed.
Rachel, I mean, I guess the million-dollar question is, if there are extra tariffs, does it first shoot up inflation and then hurt growth, or does it hurt growth automatically?
Yeah, I mean, an economist would be able to tell you probably better than I, but just sort of looking at kind of what the market is suggesting, it's kind of like looking at that growth implication kind of like as a more sort of prominent fear, just given that kind of, you know, that's sort of where the narrative has been going in terms of what sort of tariffs kind of really mean for Europe. So, I mean, you've really kind of been seeing this sort of like writ large. You know, we saw the euro, for example, yesterday having its worst day since COVID, just off the back of some of these concerns about tariffs. Though, of course, if we do see currencies weaken as a result of tariff concern, that could actually help offset some of that impact from an inflationary perspective.
Rachel, when you look at, of course, you know, the Bank of England and the UK's sterling, how much is it because of Bank of England and the budget, and how much of it is actually looking at Europe? Germany's in a mess. France is not looking great because of political turmoil, and saying, you know, actually the UK and sterling looks like an okay bet.
Yeah, there is that kind of, you know, currencies, we never look at them in isolation. We're always looking at them versus different pairs. You know, when we're looking at kind of sort of sterling versus the dollar, you know, we've been kind of around the 129 level for quite some time. We actually didn't see sterling really take too much of a battering last week, despite the budget. Sort of pound traders seem to have been looking much more closely at kind of that monetary policy. But against European markets, it's a slightly different picture. If we're looking at sort of the euro versus sterling, you know, you are kind of seeing sort of sterling looking less sure of itself. The euro actually did very, very well against the pound last month.
Okay, Rachel, thank you so much. Rachel Evans stays with us because we'll talk a lot more about the Fed coming up and what it means for dollar dynamics. Let's discuss some of the big European movers this morning, as well as the impact of Trump's election on European stocks. Our equities reporter Joe Easton is here. So, Joe, what are you watching this morning?
So we have got some pretty sizable moves in European stocks this morning, Fran, and the biggest ones are all in the reds. Take a look at Air France, down the most in 2 years after results from the big French airline. Now, their costs jumping, according to their statement. Most of this is due to higher wages. Now, bear in mind that stock is already down around 40% this year, given they have seen some weakness in their fares and disruption from the Paris Olympics as well, so hit pretty hard there. ITV in the UK slammed on some weaker than expected ad revenue. That's according to analysts. They had a statement out this morning as well. And in payments processing, this is Adyen. It's the company where you tap your card on the payment machine, and that stock dropped around 15% at the open. They've seen a big slump in some of their transaction volumes, one of the worst stocks on the Amsterdam exchange today, but actually coming up a bit again. It's a stock that has derated already quite a lot. And Novo, I've been chatting to traders about this one all morning because it was weaker. It was down almost 5% over in the early trading in Copenhagen. They did have results yesterday and an earnings call, not enough positivity around those weight loss drugs, which has sent that stock flying, of course, without giving up some of those gains today. And then I was also looking at the renewable stocks, because remember, this sector hit really hard yesterday as Trump won the US election. There's worries that he will potentially roll back a lot of the offshore wind projects. He's not a big fan of wind, Donald Trump, so he thinks that we might see a bit of a decline in some of the projects on these. Bank of America out today downgrading a lot of their ratings on these stocks, saying things won't get any better anytime soon under Trump. They think that there will indeed be a drop down in some of their orders. They do actually cut Siemens Energy today, and they've got an underperform on Vestas. All of those pretty much trading where they were yesterday, big declines on two-day basis.
Joe, thanks so much. Joe Easton there with the stocks to watch. Coming up, traders turn their attention to the Fed for any clues on how Trump's potential tax cuts and high tariff policies will impact its outlook. We'll get the latest ahead of the central bank's decision later today. This is Bloomberg. Welcome back, everyone. Let's bring back Bloomberg's Rachel Evans. Rachel, we were talking a little bit before about, of course, some of the dynamics surrounding BOE. Look, the dollar rally is fading a touch after the election of Donald Trump, but what are the markets looking at?
Yeah, I think the question is going to be, does the Fed say anything about what that sort of outlook looks like now that we know that Trump is going to be the next president? Does that change kind of the Fed's thoughts on inflation, for example? Because there's been a lot of conversation about Trump's fiscal policies potentially driving higher inflation and meaning the Fed can cut less. That would be positive for the dollar. So it's interesting kind of looking at markets today. I'm slightly surprised that we haven't seen kind of more of a pullback in the dollar, just given we did see that huge gain yesterday. We saw the dollar kind of hitting a one-year high and obviously equivalent moves in treasuries markets. But we've really kind of paused, like slight kind of pullback. And I think a lot of people want to see kind of like how the Fed actually tackles this kind of new norm that they find themselves in.
But what are the markets pricing in? They're not pricing in the full tariffs that Donald Trump said he'd put in place. So is there more to go?
Potentially, and I think there's still kind of a lot of unknowns, right, that we need to kind of figure out before we can kind of fully price them. You know, the first one being, do we see kind of that red sweep? Do we see the House kind of flipping to the Republicans as well? And then secondly, you know, what do we actually get in terms of details from Trump and his incoming administration? You know, it's going to depend a lot on kind of like who he surrounds himself with. We don't necessarily know exactly who his advisors and his secretaries are going to be, and that could potentially, when he does put some details around the tariffs, sort of tell us a little bit more about, you know, which countries, how much, which type of goods, and that will then obviously have a ripple effect through to the different countries and currencies concerned, but also to the stocks that will be most impacted.
Rachel, thank you so much. Rachel Evans there with the very latest, of course. On the U.S., German bonds also extending their drop. The 30-year yield jumping some 10 basis points to 2.75. Now, leaders from the 27 EU countries, along with counterparts from other European nations, are meeting in Budapest. I think we're just getting some pictures of President Zelensky, who had just arrived. You can see a lot of the leaders just coming in. We'll stay on top of that and bring you any breaking news as we get them. Up next, Bloomberg Brief, Danny Berger, Manus Cranny in New York, and this is Bloomberg.